Hey, good morning, good morning, good morning. It's Tom Bickett with Andy Mac Home Mortgage, and today is Wednesday, January 15th. Today is one of the big data prints that everyone's looking at to kind of determine the direction of our economy, determine the direction, most importantly, of interest rates. And that's the CPI, Consumer Pricing Index. It's probably one of the two largest data points that everyone on Wall Street and the Fed is looking at to determine, are we moving in the right direction towards the 2% inflation mandate that the federal government, Federal Reserve, is looking for, right? That's really going to kind of dictate the future pace of what they're going to do with the federal funds rate. Are they going to pause at the end of this month? Are they going to decrease? Most likely not increase. But today was that day, and we got some favorable news. The CPI came in a little bit cooler year over year, 3.2 versus 3.3 forecasted. The month over month is pretty much right in line with that forecast, which is all really good news. Just here's a quick peek at what's going on with the market. So this here is just a MBS trade. So the MBS trade essentially is when this line is going down, interest rates are going up. That's the price of mortgage-backed securities. That's what mortgage-backed securities trade for on Wall Street. So you can see here, this drop right here was last Friday when the jobs market, and I posted about this, the job market basically outperformed expectations. They were expecting 150,000 jobs created in December, and that number came in 250 some thousand for December. That was very inflationary. Bond market didn't like it. 10-year treasuries jumped. Mortgage backs sold off. We were kind of flat on Monday, flat yesterday in spite of a good print with PPI. And then today, the CPI came in a little bit better than expected. So we're already seeing mortgage bonds react favorably to that. And those are the types of things we look for. Now, one data print doesn't make a long-term trend, right? This is something that needs to remain consistent over month over month over month to show that inflation is progressing towards that 2% mandate. But as long as it continues to do so, that's going to potentially lead to better interest rates. The other big thing that is looming over the market is policy, right? What is Trump going to start enacting from a policy perspective that may or may not have impact on overall inflation in the system? So that's another thing that the traders are kind of looking for, to see what Trump's initiatives are kind of in that first 90-day run when he retakes office starting on Monday. So again, as always, if you have a question about the markets, you have a question about interest rates, you have a question about mortgage products like cash to keys, the cash team is always here to answer those questions and help you as an agent, help you as a client. Our focus in this marketplace ultimately is to help people win and do it at the highest possible level. So if you have any questions, reach out to myself, reach out to anyone on the cash team. But again, inflation number today, CPI, a little bit lower than expected, and the market likes it. So let's see if it holds up as the markets open throughout the day. And again, let's hope for this is a new beginning in 2025 of lower inflation, which will lead to lower rates, which will help out with housing affordability. Again, have a great Wednesday, good middle of the week, and we'll see you all real soon. Thanks.